Volatility is flashing possible reversal signals. Will the market shake up or settle down? The dollar index and bond yields are sending mixed messages, and the TLT concern we flagged earlier has now materialized. What's next? Commodities in focus. Oil, gold, and natural gas are moving fast. Are we looking at breakouts or breakdowns? US indices on the move. We'll analyze the SP 500 from multiple angles, check the latest on the key sectors, and zoom in on big players like NVDA. The Nasdaq's Elliott Wave structure could be hinting at the next major shift. Bonus segments. Global indices. A deep dive into NIFTY and the Australian index. Are they following the US trend or carving their own path? Special feature. The Dow Jones Transportation Index. Why is it a critical piece of the puzzle? What do you think? Are we about to see a full-blown reversal, or is just a shakeout before the next move? Drop your thoughts in the comments. Stay sharp. We've also got a quiz on Elliott Wave theory to test your knowledge. Think you can get all the answers right? Let's find out. And we begin with with candlesticks for volatility. So what we are seeing here is a very strong bearish closure. The volatility index itself formed a tower top and practically sitting on the major support level. So far, the chances for a lower low for the move down are fairly high. However, before this move happens, we might see an attempt to cancel this formation, maybe a couple of small green days. And for the futures, this is a very clean. The closure today is a very clean confirmation of reversal on a harami. So at least one or a few days will be bearish. That's the perspective from the candles on volatility and perhaps on the market overall. Now let's have a look at the other details. So this is the dollar index as we discussed it yesterday. It's a possibility that dollar continues to form a bottom here. So far, this candle is a bullish harami, and it requires a confirmation. Whether dollar makes a lower low or not, that's unclear. So far, this is the perspective. And yesterday I mentioned in our late night video that dollar needs to close above this level in order to form a bullish engulfing on the 12-hour frame. So we had it, and now the doji that is going to close in about 1 hour 24 minutes, it's kind of a neutral candle, so the odds will remain bullish. Now the question is how the index will behave overnight. And this was a potential chart that we discussed yesterday. Dollar decided not to go very fast, and technically we have an impulse of the bottom and a very complex wave, perhaps wave 2. So far, this move has been impulsive, but we need to see how it goes further, because right now this particular wave, it has an impulse down, and we might see another impulse before we can see a higher high. So far, this formation is not clear, and again, this is just a 15-minute frame. We need to see a much stronger moves, and particularly I would be looking for a reversal on at least a daily frame. So far, 12 hours are already cooperating for the bulls, but we need to see a daily also. Now let's have a look at our treasury section. So what is happening here? As we said yesterday, the move that especially the candles that closed yesterday with 2, 5, 10, 20, and 30 years were bullish, and this would be a disappointment for TLT investors. And indeed, we have a confirmation today of a bullish trend, at least on a daily frame. If we look at the 2-day frame, which also closed today, we have a strong bullish engulfing. So the momentum is the momentum is escalating, and right now bulls have much better perspective, and the rates most likely will go upward starting tomorrow. And this is the chart that we discussed earlier in March. So far, an impulse upward, a corrective wave 2, and the potential impulse forming for wave 3, which could be, by the way, longer. So far, no specifics, no surprises here. Now let's have a look at TLT. As we said yesterday, TLT formed a couple of bearish candles on the daily 2-day frames, and today it is moving lower. Today it lost 100 days moving average, and the chances for a continued move are fairly significant, particularly if we consider the technical support there. The 8-day frame, which is closing tomorrow, is likely gonna be bearish with this type of candle. Well, we'll see. So far, the chances are not very strong, but it might become stronger tomorrow. And the weekly frame is also concerning at this moment. If the current candle in 2 days closes below the low of this green candle, it will be a bearish reversal, a confirmation of a bearish reversal. And the chart remains the same. Haven't touched anything here. What we are seeing that TLT is approaching this point of no return. If it breaks below 89.68, then the blue path will be officially invalidated, and the green one also. So the only one will be on the table is the red one. Whether it's gonna be an impulse here or a potential ABC formation, this one I'm talking about, this potential A, B, C, and then a move down. And this should be in red color. Yeah, so this potential, if this wave morphs into a corrective wave B, which is not happening so far. So that's the perspective that we outlined for the bonds, yields, and TLT. Now let's move to the commodities section, and we will start with natural gas. This is what we said yesterday. So natural gas has some fairly good chances to move lower. However, this path was risky as far as I recall. And well, natural gas did exactly that. And now it's possibly forming an ABC wave. I can see 1, 2, 3, 4 here. And we know that waves 5 in commodities are often the longest. So far, there is no reversal signal here. However, I'd like to say that natural gas has been grossly oversold on several hourly frames. So if we can see a bounce here or even a reversal, it wouldn't be a surprise. But we need to, in order to go long, we need to see a very strong confirmation signal. And what candles are telling us, that candles technically are bearish. However, they are still sitting on a major support here. This is the daily frame. 3-day frame closed with a strong bearish engulfing, signaling that we might see lower prices in the next 3 days. And the weekly frame, so far it is on track for a dark cloud cover. Let's see how it closes for the weekly. So far, weekly has been bullish, and this is the red line is a 200 weeks moving average, which is a strong support line. I'm not even talking about this 50 over 100 days weeks moving average cross. Now let's have a look at oil. Oil formed yesterday a mild bullish candle, and today it is trying to confirm it. However, I can feel the challenges here. So oil needs to close above this line, above the high of Monday. If it doesn't, then the frame will be corrective. Okay, so maybe we'll get back to it in 17 minutes if we haven't finished our presentation here just to double check. But above bullish, below bearish. And the 2-day frame is also has some technical issues. I would say that this is mostly a candle formation which could be falling through methods of some sort. So the chances for bearish move are slightly higher. And if we look at the weekly frame, so this is a huge bearish candle, and this green candle that oil forming so far on the weekly frame is not sufficient in order to reverse this big trend here. Now let's have a look at the Elliott waves. Nothing changed here for our big chart that we've been tracking since the end of December. So that's the perspective for now. And we are not changing here anything, no signal. So if we look here at the smaller frame, something that we discussed yesterday, we said that there's potentially a bigger flag that is or a flat that oil is forming. And let me try to visualize it. So this is potentially would be something here. I'll just remove some unnecessary elements. So 4 is still alive. So potential flag here. And once we see wave ABC or WXY here, alternative 4, we might see another move down. So far, that's the perspective. And if oil moves above this green line, it will be a different, most likely a different count. So far, this is an approximate target for the flag, and it remains intact. Now let's have a look at oil companies. ExxonMobil is, after strong bearish engulfing yesterday, it formed a neutral candle, and technically most likely it's a bearish continuation, but we need to see a strong confirmation here. Chevron is bearish. Surprisingly, Conoco is moving up. However, I would like to see a bigger frame. This is the weekly, and it has a good chance to form a bullish candle here, or at least a bounce for a week or maybe even a couple of weeks. So this is the strong support, strong resistance, 200 weeks moving average. Let's see what kind of candle it forms in 2 days. So far, the odds have been bearish on the weekly frame, and we need to see a signal first. So that's about oil. Now let's move on into gold. Gold is forming an interesting and very contradictory signals. So far, this is the daily. Daily is bullish. The next candle technically confirms a bullish move. So we most likely will see higher prices. But whether it's going to be for a long period of time, we don't know, because this is a 3-day frame. 3-day frame is also closing in 13 minutes. And if it doesn't move above this red candle high, then this closure will be bearish. And the chances that this is a big bearish engulfing, and now gold is forming a falling 3 methods, the next candle would be down. That is very normal, very expected. And the weekly frame will be extremely critical to watch. It will be closing on Friday. We have a bearish candle here and 2 green ones within the body of the red one. The chances for, if it closes like this, it will be bearish. From the perspective of waves, we discussed this yesterday, and nothing changed in the picture. So we are still seeing wave, potential wave ABC for wave B or 2, and as long as it stays below this green line, which is all-time high, it is bearish. And if it moves higher, the chances for green path, wave 3, 4, and 5 would increase. However, I would like to note one thing. So even if gold moves higher here and makes an all-time high, this could still be a perfect ending diagonal, non-overlapping ending diagonal. We have 3 waves here, which is abnormal for an impulse. We have a very strange looking wave here with too many overlaps, which impossible to find a very clean impulse for wave 3. And if it's gonna be wave 5, also from from 3 waves, this would be a very nice ending diagonal. Well, let's wait what gold is going to say. So we are getting closer to it, maybe 1 or 2 days. And if we look at GOD, trust nothing changed here. We're still seeing it's trying to move higher. However, these are the boundaries, and this is gonna be a bullish closure if it closes the wick like this. And above the green line, if it closes below, it's gonna be a red path, bearish move. If it closes within these, it's gonna be another neutral wick pending confirmation. That's all for the weekly. Oh, that's all for commodities. Now let's move on to market waves and our indices. So today, technically from candle's perspective, was somewhat bearish closure. However, this candle went way too far, and it closed below the oh, sorry, this is a 3-day frame. This is still bearish. However, the chances that we might see a bounce are fairly high, especially if we consider the volatility index, which is signaling a reversal. We might see some bounce here. However, I think it will be limited by 200 days moving average and other critical resistance line like 8 days moving average and the other ones. For Nasdaq, a similar situation, so there is no clear reversal candle. Dow Jones and IWM all aligned. We need to see a very, very strong green candle, potentially closing above Tuesday's high. Now let's have a look at the futures that just closed, and slightly better, slightly more bullish situation here. At least we have a Harami here, and we have inside up on Nasdaq futures. So the chances are, I would say, fairly significant for a move higher tomorrow. However, I wouldn't be surprised if this is just a half a day move and then we have a reversal. I'd like to emphasize that the Dow Jones futures are very close, like few points apart from forming a bearish cross 50 over 100 days moving average. And the Russell is technically neutral. It could be both either way. Now let's check the weekly perspective. So far it is very bearish. I'd like to point that this was the 3 black crowds for Nasdaq futures, and even if Nasdaq makes a green candle, it still needs to rally about, well, at least 5% in the next 2 days in order to make a dent in this strong bearish formation. However, it wouldn't be sufficient to flip the odds. We would need to see a much stronger move. So far, the weekly price of S&P 500 is challenging 50 weeks moving average, and we can say the same about Nasdaq and Dow Jones. And Russell has been leading this competition, and it's already tried to breach through the 100 days purple line, or to end 200 weeks and 200 weeks the red line moving averages. Speaking about the technicals, we've been tracking this for a while. This is the 10-day frame, MACD bearish cross, and it technically right now it's vertical, and it's closing in 2 days, so nothing's gonna happen here. And I just did some rough calculations, so it's purely impossible for S&P 500 for the futures to reverse this cross. It would require some 15 or even more percent rally in the next 2 days, so that's technically impossible. Now let's have a look at the Elliott Wave chart. So what we're seeing, that's how we left it yesterday. So far, I'd like to see maybe another lower low before this wave 3 completes. However, it could be sufficient, and we might see a flag here for wave 4, like a bigger flag. And if it happens, then we would consider this as a wrapper here. So this is potentially for wave 4, and this wave has been corrective so far. And if it moves higher, then we might, then it's most likely we're gonna see another lower low. That's the perspective for this one, and this is the bigger chart that we've been tracking for a while. So far, it's been greatly shaped. We identified the ending diagonal here, and if this this projection is right, there is also a possibility that this wave that started in August 2024, the entire wave has been an ending diagonal. And the biggest concerns here are that the wave 3 is not exactly an impulse. We have too many overlaps and too many challenges for a clear impulse. And wave 5 in this conditions, so it's only a 3-waver. Again, similar situation. So wave 1 could be an impulse and could be a corrective wave, so it's still questionable. That's the perspective. If this confirms, then we are looking for 51.20 in the nearest future, perhaps after a bounce. And now we look at Nasdaq. Nasdaq, no changes here. Nasdaq continues to move slightly higher, and unfortunately, Nasdaq is forming a corrective way upward. And at this point, I'm not sure whether this is wave 3 or it's a wave 3 of 3. And I'm talking about this possible count. So wave 1, 2, this could be wave 3 of 3, 4, 5. And in this case, wave 3 moves here and everything adjusts accordingly. So far, these are two perspectives, and I am tracking both of them. But provided the current wave, the chances for lower low are very, very significant. Now let's have a look quickly at the sectors. So sectors are mixed at this point. So financials could be forming a matching low, the same for industrials. Matching low is technically a bullish formation. We can see a bounce and maybe even a confirmation of at least a minor bottom. The same for XLK technology. It's formed a doji. If we see a very strong bullish candle tomorrow, it would be a move higher. So XLV is falling, and the same for consumer discretionary. Utilities are neutral. They had a chance to form a bearish candle but pulled up, and now we might see even a continued move higher. Staples are bearish, and energy is also, it's neutral bearish. Now let's move on to big stocks, what we are seeing is fairly concerning development for big stocks. For Microsoft, for example, for Amazon, Apple is falling. Google is technically is bullish neutral, and the same for NVDA. Meta most likely bearish, and an interesting thing for Berkshire, it tried to make a big bullish move today but fell, and this hammer is bearish. For NVIDIA, I'd like to have a deeper look. So we have a strong bounce, technically confirming a reversal on the daily frame. However, if we look at the two-day frame will be closing tomorrow. We'll know that the weekly so far looks bearish, and particularly for 15-day frame, which closed just yesterday or the day before, it is a strong bearish candle. We might see a challenge here, but we would need to wait. That's the perspective. So generally, from Elliott Wave perspective and from candles perspective, the indices are bearish. And even if we see a small uptick or small move higher, the chances for a lower low are very, very significant. And today's bonus check is NIFTY. Let's see what the Indian index is telling us. So far, it's been on track for very bearish development. We are seeing the candles are bearish. However, we might see a little move here, but it doesn't look like it's gonna happen if we look at the bigger frame, like 10-day frame, and the weekly frame is not looking bullish for now. However, still 1 day left, and we might see if the wick closes above the red candle, it might be a bigger reversal. But if we look at the bigger frame, this is the 10-day frame, and the last time we looked at it, it was March 1st. Today is March 12th. So far, a freshly made 8x20 EMA bearish cross, and the index already challenges the 50 periods moving average. That's a very bearish signal. And this is statistical analysis that we ran previously, and we said that the index is on average after the technical crosses, it lost an average 37%. A loss of 37% will be down to 16. And for the 3 months closure, which is in 15 days, so far that looks very bearish. Even if the current candle pulls up, and even if it becomes green, it's still gonna be bearish. Now let's have a look at the charts. So these we are tracking since way back in October. This is the December version. I think it's still intact here. So far, we haven't changed it since March, and it's been tracking nicely. The chances for a move lower are significant, and nothing to add here. If we look at the bigger frame, this is the chart that we outlined on October 6, back in October 6. And so far, this chart remains intact. I haven't changed it. So we are approaching the lower boundary of the minimum target, and the index would be absolutely lucky if it reverses here. However, I have too many doubts about it, especially if we start looking into candles and some technicals. So this wave could continue lower, and it might be a big ABC formation for wave 2. And this is the worst case scenario that I was looking at also back in November. So the chart also remains unchanged. If we continue to see bearish candles one after another, then this would be the perspective. And this is the 37%, not too far from this particular target for wave 2. And this is wave March 12th. Well, that's all about Nifty. Now let's have a look down under. What we are seeing here is a very strong move down by Australian index, and it is grossly oversold. I think it's due for a little bounce at least. For so far, the 3-day is bearish, 1 day is bearish, and the weekly is also strongly bearish. If we look at the monthly frame, we can see a very similar setup for in 2020, in the year 2021, and now in 2025, which all of them triggered big bearish moves. So far, this move looks like it's half done. And if you look at the freshly made MACD cross on the monthly frame, well, it looks like this index is going to lose more. And the chart for this index is also outstanding. First of all, we spotted this potential ending diagonal way back in February, and we discussed it even in December. Now it is falling, and this formation here is an ending diagonal, and it looks like it's gonna stay like this. In our case, we are looking for 63.74, which is a foundation of or origin level of the diagonal. A loss of 26% of the top, well, cannot say guaranteed, but is very, very likely. And the final feature of today is Dow Transportation Index, Dow Jones Transportation Index. This is the chart that we outlined and shared with our subscribers back in November 14, when Dow Jones was 17.5. Dow Jones Transportation was 17.5K. Now it is down of the top to the call almost 16%. And this was the chart that we shared in the middle of February, saying that it was the final gentleman's exit here for those who are dealing with Dow Jones Transportation. And it was 16.5. Today it's 14.6. And it looks like the index is following wave 3 of a bigger degree. And this was the entire corrective wave that started way back in November 2021. So Dow Jones failed, DJT failed to form another higher high, and this wave is clearly corrective. So these are the target area, somewhere from 13K to 10.5. And well, we are expecting the index to move there in a couple of months, maybe a couple of quarters. Well, that's all for today. Today's analysis revealed critical signals across major asset classes. Volatility, yields, commodities, and indices are all aligned for potentially big moves ahead. Will the S&P 500 confirm a new trend? Is gold preparing for a rally, or will the dollar reclaim strength? Did TLT just send a warning to the broader market? Markets are moving fast, and the next few sessions could be crucial. We'll be tracking every signal, pattern, and wave structure. So make sure to stay tuned for the next daily market waves update. And let's hear from you. What's your biggest takeaway from today's analysis? Are you bullish or bearish on the market right now? Comment below and let's discuss. And don't forget to take the quiz and test your Elliott Wave skills. Stay ahead, stay sharp, and as always, happy trading.